Hi everyone, it's Adam Coburn here at Low & Co. Thanks for checking in today. And today we're doing the first market update for the Wellington real estate market, of course, looking at the month of January 2024, the first month of the year, of course, and comparing it to the last 1 to 2 years. Overall, folks, Wellington values have been on the rise. In recent months, it's fair to say they have been rising slower. So the recovery has slowed down a bit. Overall message to sellers is while we're still in a bit of a seller's market, it's less aggressively a seller's market, it's a little bit more of a balanced market. And buyers, my message to you continues to be, don't wait for things to get better. Let's get into the detail now. Median sale price, $760,000 in January 2024 versus $765,000 a year ago. Median prices, basically the same as a year ago, folks. Roughly stable now for about 18 months or so. If you follow these videos, then you will know that I don't really pay too much attention to the median sale prices, of course, because they don't just reflect underlying values, which is fundamentally what we're all interested in. They reflect, as much as anything, the mix of properties sold as well as underlying values. So the best gauge of underlying values is the Real Estate Institute House Price Index. So let's dig into the details here. So here's what I would call the league tables. Wellington and Auckland about the same at roughly sort of give or take 20% down compared to the peak. Now Wellington, of course, has led the league tables, a rather auspicious sort of position to be in, of course. Well, since we passed the peak really and the drop started, but now and for the last few months we have been roughly level pegging with Auckland. Still, we are leading the league tables in terms of the drop that since the peak. Having said that, here in Wellington we have been as low as 26% down compared to the peak, and now at 20.9% down. We have recovered a fair bit since we've passed the trough, since we passed the bottom of the market, so to speak. Look here at the 1 year results. So New Zealand overall 2.2% up, Auckland 2.4% up, Wellington 4.6% up. So Wellington has shown the way in terms of the recovery, better recovery than most locations across the New Zealand rather. But bear in mind, we did fall earliest. We were the first to start falling. We fell fastest. We hit the bottom soonest. So it has just simply been that we started recovering before most other places did, and that is showing there over the last 1 year result. Looking at the 3 month results there, you see our recovery has continued to be stronger than most locations over the last 3 months. New Zealand overall broadly level. Auckland has actually dropped by 1%, which is not typically what we've seen from Auckland over the last 6 months or so. Wellington a couple of percentage points up over the last 2 months. Looking more closely at the different territorial authorities, the different parts of Wellington region, that's Upper Hutt, Lower Hutt, Porirua, and of course Wellington City. We hit the bottom and we started recovering in early 2023, almost a year ago. So we've been in recovery mode for almost 12 months now. And you can see the pace of the recovery. You look there at the orange line on the graph, that represents the 3 month total recovery. And it hit a peak a few months ago and has plateaued and then has been tailing off over the last couple of months. All that means is that the pace of our recovery, it is still positive, we're still recovering, but the pace has flattened out and slowed a bit in the last couple of months, December and January. Over the last year, you can see there that the recovery to different degrees across all Wellington territorial authorities. So all parts of Wellington region have enjoyed some recovery. Upper Hutt and Wellington City over the last year certainly have been on average have enjoyed the strongest recovery. But in January, over the last 1 month, all Wellington locations seemed to weaken a wee bit. So 1 month, of course, doesn't make a trend, so we'll see what happens in coming months. Moving now to a number of new listings. So this shows the supply side of the market. New listing volumes have been recovering finally over the past few months. It does look, if you see that, look at that red graph, the red line there, you see, we seem to have hit the absolute trough. We dropped in terms of our listing volumes really consistently since sort of as soon as the peak was reached, and people saw, gosh, we seem to be we seem to be hitting a peak, or we've just gone past a peak. We saw our listings come right up, and then we saw new listing volumes drop back away again as vendors lost their confidence that they were able to achieve a sale at a decent price. Numbers of listings finally started to recover again as confidence has slowly returned amongst the vendors when they see again that prices have indeed plateaued, recovering a bit. The risk of not selling has really reduced, and so finally some more vendors stepping forth, coming to the market. So there you see the January average of 603. We are still in January down on that average, but not by much. And so we've seen these listing volumes recover almost up to what is an ordinary level, a normal level in January. So that's good to see. And you can see in this next graph a different representation of the same data. Both December and January saw about 10% more new listings than the same month 12 months prior. After vendors, as I say, have been on strike for about 15 months, finally some confidence returning after prices plateaued and start to recover. So sales volumes, on the other hand, we're now up 18% compared to January a year ago, and only marginally less than in January 2022, which was just after the peak. So yeah, 18% compared to 12 months ago, only down 5% compared to 2 years ago, which, as I say, was just past the peak, of course. But still, January sales volumes were still significantly below what we normally see in a January. So still, we are way off. A way to recover yet before we see the what we would consider to be a normal number of sales for this time of the year. But the number of sales have been consistently more than the same time 12 months prior for the last 3 months in a row, sort of hovering between sort of 15 and 20% more than 12 months prior for November, December and January. So that seems a fairly consistent pattern now. So that's encouraging for vendors also. So number of days to sell. How long does it take to sell a property? January is typically a longer duration sales month because most properties sold in January, of course, they were listed in December or earlier, and very few properties coming to market sort of from about mid-December. So the ones that are selling in January, firstly, the number of sales indeed are low compared to most other months, and the ones that do sell tend to be ones that have been on the market a wee while. So 46 days for January compared to 62 12 months ago and 49 two years ago. So we have seen the duration to sell, although it's longer than we've seen for a number of months. It has been less than both the previous Januaries in 2023 and 2022. And indeed, at 46 days is only marginally slower than the January average of 43 days. How many weeks worth of inventory have we got on the market? Well, we had 12 weeks in January versus 18 a year ago and 14 2 years ago. So interesting. We've got less inventory on the market in January than we had in January 2022, only just past the peak, of course, at the end of 2021. So at 12 weeks, we're also several weeks below the average of 15. So technically, we're still in the seller's market. Now, we're not in the same aggressively seller's market that we saw sort of mid to late-ish 2023, where we saw 10 to 11 weeks worth of supply, 12 weeks, a bit more than 10 to 11, but still less than 15. So technically still a seller's market, folks. How many listings we've seen on TradeMe? 2632 as of a couple of days ago, compared to 2715 a year ago and 2459 2 years ago. So look, compared to both those numbers, there or thereabouts, the same amount of stock on the market as a year ago and 2 years ago. We are seeing large increases over the past few months as listing volumes are exceeding number of sales taking place. Partly this is a seasonal thing. As we get into spring and summer, we do tend to see a large increase in the amount of properties coming to market, and it can take a little time for those sales to follow through. So folks, in summary, Wellington values do continue to increase, but those increases are moderating. New listings have increased almost back to seasonal norms now. Sale volumes have also been increasing, but they are still quite low. So they've come off very low bases. They're going up, but still not what we would call normal yet. Duration to sell has been long, but normal for January. Inventory remains quite low. We're in a seller's market, kind of just. We haven't seen the same low levels of inventory as we saw in mid to late 2023. Trade near listing levels are the same roughly as we saw a year ago and 2 years ago. So the message to buyers is, look, the market's still reasonably strong, but the degree of strength and the pace of price rises are both easing. Buyers, again, don't wait for things to improve. Get out there and find the property that you're after, if indeed you can afford it. My thanks, of course, go to Real Estate Institute of New Zealand and realestate.co.nz for all the data which I use here. Thanks for checking in again. It's Adam here at Low & Co. Obviously, if you want personalised advice, you know how to find me. Just reach out. Happy to help. See you next month.